Hi, everyone. We're doing a video here, like off the cuff again, sort of because of all the stuff that is happening in the markets right now. And this is much deeper than most people think. So if you've been paying attention, you are ahead of the game compared to most people. The news media is very much papering things over. But anyway, I've got Dan Rubach with me once again, and Dan had a couple of things to add to this. So, Dan, why don't you tell us what you were thinking about what's going on?
Well, as far as the banking stuff, Mike, I'm going to leave that to you. I'll stick to the role of producer here. But someone left an awesome comment just while we were waiting to go online. So I'm going to bring that up. You haven't seen it yet, so check this out.
Excellent.
That pretty much sets the scene, right?
Yes, it does. That sets the scene for this video. By the way, I want to say to anybody, I don't see all of the questions scrolling by. Dan is watching those. He puts up the ones that I need to answer. But anybody that paid to ask a question and it didn't get answered, this makes me feel pretty bad. And I will be going through the previous video again and answering any question where somebody was trying to pay to get their question asked. I don't like that system, so we're not going to use it.
Yeah, I think we'll turn that off for tomorrow, Mike. But yeah. I think we only missed two. One of them was a question about the Second Amendment, which was kind of off topic. I'll
get to them in a future video when I when I look at them and figure out the proper answer. Anyway,
it's pretty hard to keep up with this stuff. They're going by a mile a minute once we get going. So
yeah,
we'll do what we can.
For anybody, once I start sharing my screen, I don't see anything else. All I see is my screen that I'm sharing. So I don't even see the comments that are coming in at that point. So that's one of the reasons that I'm not responsive to the stream of chat that's going on in the sidebar. Is I don't see that. So getting into this, this crisis does go a lot deeper. It is systemic, and it's part of this fraudulent monetary system that we've got. And so everything that the news media is saying, they're reporting from within the matrix and they're plugged into it. They're not seeing the whole picture, the outside of, they haven't taken the red pill and they're not seeing that. They think that this evil system that we're in is normal, and they report on all of these things from that perspective. They don't see that this system is engineered for the people that run the game to become very wealthy, and then their friends to become very wealthy, riding on the backs of all of the rest of us. I was going to do a long time ago a video on how, like an entrepreneur starting a company, he's running as fast as he can, and he gets these people with him, and it's this team, and they're running as fast as they can. And then you've got the government and all of these people that start riding for free. And it's like somebody throwing a hook, a fishing line with a big grappling hook and they grab on to these people that are trying to run, and they're just skiing in the background, riding along for free at somebody else's expense. And it makes it really hard for people that are creating prosperity, anybody producing a product, a good or a service, to create wealth. This is where all wealth comes from. And when they do, and then we've got these politicians with these insane budgets that they're passing, these insane budgets that plan on all of this deficit spending on purpose, and then they don't even there we've come to experiment on you, plunder your resources and enslave you forever. Okay, you're from the government, and this is absolutely true. And they really hurt our prosperity. And worse than that, this whole monetary system enslaves us and future generations. So any prosperity we're enjoying right now is all owed back plus interest. And that's the problem. That interest is paid to people that get to invent, they get to imagine the currency into existence and type it into your account, or create notes that are in circulation. So I'm going to first share with you an article. This is Swiss National Bank issues statement, we will provide liquidity if necessary. The next article shows you Saudis fold. They refuse to throw any more currency at Credit Suisse. It drives me insane that people don't know the difference between fiat currency and money, and how a fiat currency is absolutely designed to transfer wealth from you to the few at the top.
Mike,
yeah.
I wonder if we can get a air horn for when you're reading currency instead of money when we do this live.
Oh, me having a little air horn here?
Oh, if I could get a little, if I could do a digital one, like we did Jeff originally, and then it turned into a habit.
Yeah, and that was fun. We actually had the clown nose too.
That was, yeah.
There we go.
I didn't get a Christmas card from Jeff that year, so.
Okay, they say Credit Suisse 1 year CDS, and it bothers me. I'm somebody that always defines, because I don't want to talk over anyone's head. And this article is an example of throwing a whole bunch of acronyms that somebody may or may not know at them. But this is 1 year credit default swaps explode as counterparty risk hedging soars. So finally, they're hedging, but a lot of it's not as profitable to hedge. Hedging has a cost. And this is the reason in what banks might perceive as a low volatility environment, until something blows up, they are more competitive if they don't completely hedge. So the closer they can run toward the ragged edge of not, of balancing on that tightrope, if they work without a net, they make a lot more profits. But that net gets really important when you fall. So I'm sorry I'm laughing, but I feel with the precious metals that I've been accumulating now for 20 years, I've been getting ready for this moment. I don't know if they're going to be able to paper over this one or not, but if they do, it's going to be for a very short duration. They papered over the 2008 crisis, and what they did to paper over the 2008 crisis is what is causing this. But scrolling further down, this has a few great charts in it, and you see this is a ADRs. I'm not sure what this is, but it's a tremendous drop. The credit default swaps were something that it's gotten very expensive for them to. I mean, they're trying to buy fire insurance after the house is on fire. That is the problem. But look at this is the 1 year credit default swaps, and this was the Lehman crisis. And look at where we are today. I mean, I'm going to enlarge this. My computer enlarged it too much, but there you go. There you get a sense of just how urgent this crisis is. This is absolutely huge. And then there's a bunch of other charts in this article. Rate change expectations. So moving on to the Bloomberg article, the Saudi National Bank doesn't want to boost its stake in Credit Suisse. So they've got a very large stake in Credit Suisse, but now they are nervous about this thing. And again, some very good charts. This is the short-term bonds aren't safe. The Credit Suisse short-term bonds. And here you have it dropping from almost just under 100 here to 88 and 87. So they're taking a 12% haircut on these things right now. Now, I want to point out that Credit Suisse is one of the world's major financial institutions. This is like a Goldman Sachs of Europe or JP Morgan. Uh, this is not Silicon Valley Bank or Signature Bank or Silvergate. This is something huge where they are now not being trusted by the Saudis. this is bad. The spillover might happen. It might not. We don't know yet. But what we do know is that we're in uncharted territory, all because of Ben Bernanke. Now, the unrealized gains and losses that I've been talking about, I presented this chart a couple of videos ago. This is on investment securities. So remember that, investment securities, but it's showing these unrealized losses in the banking system. And this is from the FDIC. They were reporting this. And that this covers to the end of last year. It doesn't cover into this year. Then, after this came out on the 13th or 13th, which was Monday. So this is after the crisis happened. I want to reiterate, people like George Gammon and myself, John Titus, Belang P., we anticipate by going in and reverse engineering things. And in my book, I warn about this, about exactly what is happening right now. And so this was done, this is a bunch of PhD economists going in and analyzing the entire banking sector after the crisis happened. So they're reacting. Instead of anticipating, they're reacting to the news. The US banking system's market value of assets is $2 trillion lower than, so this one is investment securities. And it was 680 billion, 675, 680, 690 billion, because this is 675 to 750. So this is below 675. But it's big. But that is investment securities. That is the treasury bonds and the mortgage-backed securities that the banks hold on their balance sheet that George Gammon was talking about, the having the hedging, the interest rate hedging on that Silicon Valley Bank didn't have. But mark to market, $2 trillion then the suggested by their book value asset accounting for loan portfolios. This is loan portfolios. This is the largest portion. When I showed day before yesterday, the balance sheets, the consolidated balance sheet of all of the banks that the FDIC insures, the securities was 5 trillion, the loan portfolios was 12 trillion. And they're saying that held to maturity, marked to market bank assets have declined by an average 10% across all banks, with the bottom fifth percentile. The bottom fifth is the bottom 20% of the, so it's 20% of 4,000 and something. This is a lot of banks experience a decline of 20%. So the bottom 20% experienced a decline in their asset values of these loan portfolios. This is super serious. It's systemic. It is across all banks. But one thing that we're experiencing right now is people are mostly getting scared of small regional institutions, and they've been moving their deposits to the big banks. So it's almost like when the Federal Reserve Act was passed, one of the big worries and the discussions in Congress was, is this a method of consolidating banks, of putting small banks out of business? And that's exactly what happened. And it happened to a huge extent in the Great Depression. All of the small non-Federal Reserve System banks, a lot of those ended up being taken over by the big banks. And that is one thing that we are seeing right now. And And so I'm just going to change subjects really quick. This is
Just a second, Mike. We've got a couple of viewers asking where they can get that PDF. I know the address is on the screen there, but what website can they go to grab that?
Can we post a link to it? It was on our website 3 days ago. Cameron put it up.
Gotcha. I'll go grab that now. I'll put it in the chat.
And I can send you the PDF. And if
no, you're good.
Okay. Then there was a link to this is a summary of the major analysis. This is 5 pages, the major analysis of large type. The major analysis, I think, is 20 pages of fine print. And it would be in, language that tries to make your head hurt, because
Actually,
they're PhD.
For the people asking for that, it's on the GoldSilver website. I just realized if it's 3 days back, I'm going to have to scroll through a million different things to look at it. And,
okay. Well, look for it in the link below this video later. You can do that, right? Okay.
Easy. Yep.
Okay, great.
If I start doing that, I'm going to hit more wrong buttons, which I've done already. Sorry.
Yeah, we're learning a new system, folks, and we're making mistakes, but we have to do this because everything is so urgent right now. Normally I wouldn't be doing daily videos like this, but with what is going on, this is absolutely necessary.
He's got it. The guy says he's got it anyway, so we're good to go.
Okay. Global bank reset is coming. All depositors will have their deposits protected. Now, this is one thing, the president announced this. Nothing to worry about. You're protected 100%. So instead of protecting up to 250 million, now they're 250,000, I'm sorry, deposit insurance. The government is going to backstop everything, and they're doing this through this special purpose vehicle they're setting up. But guess what? Ultimately, you pay for it. The government doesn't have anything that they can give anybody. Neither does the Federal Reserve. The Federal Reserve, when they imagine currency into existence, they imagine a number, they type that into an account to be able to buy an asset. So they buy an asset with these imagined numbers that they type. Get my book. Actually, you don't have to get the book. Just go and read chapter 4 at ggsr21.com. It's free. So that one is really important, and it'll show you how they do this. And that, no charge. And like I say, send it to everybody that you can. Just download the PDF and email it. But all depositors will have their deposits protected. I get the feeling more and more when you look at the system wasn't designed where it could last forever. I am amazed that it lasted 100 years. I'm amazed that Ben Bernanke was able to paper over the giant cracks of the global financial crisis of 2008. But by doing so, I describe it in my book as a hurricane, and a hurricane has this eye in the middle. And that eye, if you're on an island like where I live, Puerto Rico, the hurricane passes and the winds are blowing really strong in one direction. And then you get to the eye, suddenly it's calm, it's sunny, it's beautiful, just light breezes, nice warm temperatures. Well, the energy in the hurricanes are powered by an energy differential of the warm seawater and the cold air above. The greater that temperature differential, the more powerful the hurricane becomes. As it picks up speed, that eye grows. We just had an eye in this financial hurricane that was more than a decade wide. We're talking about from 2009 until today. That's how wide this eye was. Ben Bernanke turned up the heat of the ocean to boiling. And so the winds on this side of the hurricane are like 10 times. I believe that it's going to be worse. This could be the end of the financial system that we have as we know it right now. It will morph, and they're going to be very, very desperate. And this global bank reset that Max Kaiser is talking about here might be coming. And the USD and all other fiat, he's calling it money. Max, please join us. It's not money, it's currency. Money has to be a store of value. Currency is constantly fabricated and then vanishes. It's imagined into existence and then it's gone. And if it was money and was a store of value, we wouldn't have long-term inflation over the long term. We'd only have these short-term inflations and deflations based on velocity that net out to zero over the long run. In fact, mild constant deflation is what we should be experiencing if we had a fixed money supply, like, if we were using gold as our money without a gold standard, where they're giving you a claim check on money. That's a gold standard. It's I promise to pay you gold is a gold standard. If we were using gold and not a gold standard, what you would see is that we get better at producing everything. Mankind gets more efficient. We're better at building a house. We're better at chopping down the trees, digging up the cement, mining the copper for the plumbing and the wiring. And instead of having a hammer and nails, we've got these nail guns, and 20 guys can, in the same time it took to build an old Victorian house before the Federal Reserve was established, to build a Victorian house back in 1910. Now, the same crew in the same amount of time can put up a swath of 120 houses. And so a house that sold for $3,500 for $3,000 back in the Great Depression, that same house now is $300,000. What happened? Did the house change or did the dollar change? It was the dollar going down. Right now, that house that sold a single family median price home should cost you maybe $1,000. Of course, you wouldn't be making as much, but all of our lives would be better, and we would not have to be worrying about inflation, staying ahead of the game, always running as fast as you can. If you save, your dollar would buy you more tomorrow than it does today, and so savers would get rewarded. Anyway,
I think that's one of the biggest things that people miss in what you were just talking about, is the leverage isn't just in producing the goods and services more efficiently. Think about all of the time that people spend. I mean, there's thousands of people watching right now. All the time that people spend trying to figure out how to keep, not just keep up, just to keep their head above the water, basically.
Yes.
And to not drown. And all of that brain power is used for something which isn't necessary at all if we get our act sorted out.
Exactly.
And think of the things that we'd invent, because the brain power of most of humanity is then free to go and think about important things, how to help each other, provide better goods and services.
Yes.
Anything but just treading water and trying not to drown in this crazy system.
There would always be wealth disparity in a society because some people are just more ambitious and more inventive than others, or more organized. And so there's always going to be a wealth disparity. But that wealth disparity is maximized in a capitalist system by this insane, evil monetary system that we have. It exaggerates all of this. In socialism, it's exaggerated by the very structure of socialism. All of the people that run things get to ride around in limousines, eat great food, and live in fantastic homes, where everybody else, the middle class, vanishes. Everybody becomes poor except for the people that backstab their way to the very top of the government. If you're really good at stabbing a friend in the back, then you are somebody that could actually run a socialist system.
Professional sociopaths are the ones who end up in power, and we've got a system that rewards that.
Yes, right.
If you can't laugh, you got to cry. So, like Mike said, it's not good to be laughing at this. But what else can you do?
But for all of us, we just need to know as much about what is going on to be prepared for it as possible. So the US dollar and other fiat currency will be swapped for CBDC, and depositors will be given a bonus amount of the new currency when the switch is made, like the quick version of the Euro switch. And I discuss this in my book in chapter 1. They're not just going to do this. There's going to be, when they finally offer Fed wallets, and you can get your Fed coin, there's going to be some in there already that you can claim. And that will be the bait for people to take the hook and switch into their voluntary self-enslavement. And a whole lot of people will do that. Some will resist. Then they'll make it so that your tax refund, for the people that are on things like food stamps, the SNAP program, we used to call it food stamps. In Puerto Rico, an enormous percent of the population gets coupons. So it's basically food stamps, and it looks like a credit card these days. And at the market I shop at, the cash register machine is turned toward the checkout line, and it happens to be facing the person that's after you in the checkout line. They get to see everything that you're buying. So I get to see everything that the person in front of me is buying. And I'd say that 1 out of every 3 times, 1/3, it's somebody has $500 worth of groceries. And I've got to plug in my computer so my screen doesn't keep on dimming. $500 worth of groceries. Their bill is less. They hand the cashier a $20 bill, and they get change back. And that's for things like cigarettes and the stuff that the SNAP program doesn't cover. But
all things fun. Remember, Doug Casey used to say that the ATF, it stood for all things fun.
Right. Alcohol, tobacco, and firearms, all things. Yeah. What's going to happen first is all of the people that are using any government program to get that, and this would include eventually Social Security, to get your Social Security check. If you're a retiree, you've got to have this central bank digital currency. In Puerto Rico, though, it's a huge cash society. So there is more cash used over there. So it'll take a little while for cash to go away. But the SNAP program, first the bait of having this free CBDC in your Fed wallet that you just download into your phone. Then after that, it'll be the SNAP program and other government assistance. After that, it will be Social Security. After that, and this is in the book, you'll only be able to get your tax refund in CBDC in your Fed wallet. And after that, you'll only be able to pay your taxes in CBDC. If you don't go into this system, that means that you can't pay your taxes. If you don't pay your taxes, you go to jail. And so everybody will be enslaved by this system unless we all fight this. Write your congressman. This is a very evil thing for politicians to be able to control everything you do. Moving on to gold. Look at what has happened to gold in just the past couple of days here. It's really had a great rally. It's doing what it's supposed to do. There could be a drop, but there are some big support zones. If this turns into a worse crisis, like George Gammon was saying, the banks are going to want to get liquid, and so they're going to dump tons. But also, many investors have a trading platform, and they're out on margin on all of their speculative things. I own some Tesla stock, and I accumulate it on the way down whenever it hits a gap. Gaps have a 92% probability of being filled. And so I marked out all these gaps. I bought in because I know that one day it will be the largest company in the world. Their robotics division only will be multiples of the next largest company. I'm not talking about their cars, their robotics, their energy, the people think it's a car company. Anyway, so I am exposed on both the upside for humanity, but that is a long-term bet. I'm betting that Tesla and everything else is going down severely, and I'm going to be accumulating more and more Tesla on the way down. I've shared all of this with my insiders, which I will get to in a moment. But the vast majority of my portfolio is precious metals, and my portfolio was only precious metals for many, many years until I reached this very comfortable spot where I had a lot of gold, and my wealth in silver is measured in tons. And so once I reached that, that was the only time when I actually ventured out into the mining sector, the precious metals miners, and some other investments that my insiders know about, including Tesla. So moving on, this is charted 30 years of central bank gold. Did you want to say anything, Dan?
No, just that I'm trying to keep up with some of the comments. The one thing we missed, someone had a question about what you think the timeline might be for a CBDC. You did cover that. If you look for Mike's interview, yeah, it's in the book. It's also, there's an interview with Stansbury that Mike did about 2 weeks ago, and he covered it pretty well there. In fact, there's a clip of that on our channel as well.
I think that, though, that they are trying to push the banks, the big banks, and until they work. The banks that are a member of the Federal Reserve System, they have to buy stock in the Federal Reserve when they become a member. So, and then the Federal Reserve is the regulator of the banks that are the stockholders that own the regulator. This is a great system, for them. So the banks own the Federal Reserve. They get a 6% dividend on their investment. But if the Federal Reserve comes out with a CBDC, it takes away all of the depositors from the banks. And so they're trying to figure out how to work this where the banks still get their cut and the Fed gets their cut and the politicians get their control. Basically, like in the book, I said that, the holdup right now is all of the big banks. They don't want this to happen where it's just a CBDC that comes out and replaces bank credit in your checking account. That would basically put the big banks out of business. And so that is the holdup. But I have a feeling that right now, this program of CBDCs is in overdrive, that they're trying to figure this out, how to make sure the banks get their cut and the Fed gets to run things. But they can, once this happens, they have complete control over you because every dollar is programmable. Every penny is programmable, meaning that, you go into a store and it won't allow you to buy certain items, or it won't allow you to buy anything outside of a certain radius of your home, or, selectively they can control where you travel, what you do. And there's a lot of reasons that they're going to push this. If we're on central bank digital currency, they can prevent the drug traffic, and they can do this and they can do that. Well, you can't control human beings all the way down to the final detail. And who are these idiots anyway? These people that we vote to tell us what to do and run our lives. I resent this every time I go through customs or the TSA. You can't believe how furious I am.
I've seen it. We've had some fun with it.
Yeah, and I'm disrespectful, just like Doug Casey. Doug Casey, people would tell me, would cause problems for customs, and he's fine, taking 3 or 4 hours of their time up with, anyway. So these are central bank gold inflows and outflows. So these are their purchases. This was central bank sales from 1992 all the way to the financial crisis of 2008. And look at what has happened since. And this is last year, 2022. Makes me wonder what 2023 is going to look like. But you look at the accumulators, and it's all the East, with the exception of Mexico. This is the only thing that's in the Western Hemisphere. It just shows you that how many places are getting ready for something big, and that something big may have started. So I do, I hate advertising, but you know what? What I've found out, especially in just the past few days, we just got a letter from a competitor, and we're all friendly competitors, most of us, and we like it when each other does well. But more of my competitors make great gains off of the work that I have done than I do. And I do want to encourage everybody to get my book. If you have read it, please go and give a review on Amazon. For some reason, Amazon was not marketing this book. This is the #1 book on precious metals investing, and because it says gold and silver on the cover. In a situation like we've got today, people buy this book, and what I'm doing is I'm educating them on some history, the economics, and the politics of this. It isn't until chapter 7 that you actually get to gold and silver. The first 6 chapters are basically, I'm sneaking in a real education so that they understand the financial world that they live in. And that makes it the best-selling book on economics and the best-selling book on monetary history, because people don't buy those books. They sound boring. But this, I'm going to get rich. I'm going to protect myself. And so they buy it. And basically what I'm trying to do is give everybody this. It isn't gold and silver that's going to protect you. It's your knowledge about how the system works that is going to protect you. And so we're trying to figure out how to get the price down on this book. I spent week before last an entire week in a studio doing the audiobook. We have been working since October on the ebook, but the ebook with every different reader presents differently. And it turns, you can't just take this book and turn it into an ebook. No, it's almost like writing the book again from scratch. It's the same thing when we try to go to black and white from this book. I want to come out with one that's at least $10 less expensive, that's black and white. But now you've got charts with 3 or 4 lines on them that are all black. Everything has to be redone. And then it's on, when the book is like this thick in color, it's going to be about that thick in black and white because it's on this cheap, fluffy paper where the ink bleeds and stuff. So this book was very expensive to produce. That's the reason it costs this much. I am working feverishly on ebook, audiobook, and a cheaper paper book. So they are coming. Just give me a little bit of time because I'm spread a bit thin here. By the way, you can go to GGSR21. Everything there is free. If you decide to buy gold and silver, there is a good reason to go to GoldSilver.com. And our prices and our products are the same as everybody else's. Our prices are competitive with everybody else, but we take our profit, and we're the only ones with 2 full-time animators. And Dan, who he's the producer, director, editor, and sort of runs the entire media team and me.
Live streamer.
Huh?
Live streamer.
Right. Instead of taking our profits and spending it all on keyword searches and Google Analytics and all of this stuff like all of our competitors do, what we're doing is creating education. And without selling, I've done this without ever asking for a donation. All of the stuff that we give away on our YouTube channel, all of the information that we give away, the book is the only thing where I'm asking for a source of income from, because that book, it's the hardest thing I've ever done in my life by far. It's multiples harder than the second hardest thing I've done in my life, which was my first book. There's thousands of hours of research and writing, and it's spread out. The first words, I was just looking at it. Actually, the first words were written in 2011. So it's been 12 years that I've been on this. I just didn't have the sense until 2018 that there was a financial crisis coming. And then I stopped writing during the pandemic, plunge. I thought everything was over with. Then I started writing in 2021 and 2022. So for several years, I turned down all interviews. And so my public profile shrank a little bit because I was turning down interviews on other channels and live events. And that was a sacrifice I had to make to get this book done. And it was urgent. And what's interesting, my first book came out a month before the financial crisis of 2008. And this book came out just 2 weeks, 2 weeks before the meltdown of Silicon Valley Bank. So it's the timing was excellent. I wish Amazon wasn't working against me. For up until this morning, if you did a search on Amazon for gold investing, this book, which was the #1 seller on gold investing, did not show up in 20 pages. It started off with my last book, and then it ended with Eat That Frog, which was a book about time management. So there were very few. Gold investing brings up, I don't know, 10, 20 books on gold investing, and then 50 books or 100 books on everything else. Moving on. If you're a customer of GoldSilver.com, you get the Insiders program. Now, I haven't made an Insiders video for a little while because I haven't made any changes in my investment. But with the Insiders program, my promise to you is that you will learn what I am doing. That's the fundamental promise. I also add things to it now and then that are above what I have promised. But at minimum, you're going to learn everything that I am doing and the reasons why.
Belang P, Mike. Is this Belang P is in the chat?
Oh, really? I want to say hello to Belang P. I do watch your stuff now and then. I think you're a great analyst. And like I say, there are very few people that go in and reverse engineer the financial system, the monetary system. You're one of the few that is willing to spend the boring hours upon hours it takes looking at balance sheets and data tables and stuff like that. And so congratulations on doing all of that. I'm going to interview you sometime if you want. Getting back to this, there are 23 different indicators that I'm developing because the worst thing that you can do as an investor is let emotion guide you. You want to be guided by numbers. And, as everything was going into the almost everything bubble, everything except gold and silver, they're not in. You've got to measure them against gold and silver are crises hedge. So you've got to measure them against the rest of the economy and the scale of the panic. That's gold and silver's peak. When they go into a bubble, it will be because of panic. They're a crisis hedge. And so the Gold Silver Insiders program, you're going to learn what I'm doing, but I'm developing all these indicators that I've already back tested a bunch of them back into the 70s and through 1980. And I'm looking for a big spike, something that separates those days of when to sell from all the other rest of the noise. And I've been putting this together for years, these different indicators. And so I plan to sell and go into other asset classes. I'm never going to be selling my entire position, but I'm going to sell 10 or 20% of the position at a certain level that these indicators reach. And then 20% at a certain level, and then another 20% at the next level, and another 20% of the remainder. If you're selling of the remainder, it means that you're never going to run out. There's always 80% of the remainder left. But by doing this, I should be able to catch, nobody can catch the top. If they say that, they're lying. If they do, it was an entire accident. But you should be able to capture around that top. And we are nowhere near it yet. 90% of the move comes in the last 10% of the time. We may have begun that last 10% of the time. So moving on, technical analysis is tea leaves and goat bones. It's not always right, but let's say that it's right 52% of the time or 53%. Couple that with fundamentals, and then you have a powerful tool for guidance. I like the fundamentals because the fundamentals always play themselves out. You just don't know when. Technical analysis gives you a little bit of a clue of where you might be. But like I said, it's tea leaves and goat bones. So I use a cup and handle is one of the most bullish signals that there is. There's also pan and handle, where it goes down and then goes into a real long consolidation, comes up, and then you have a flat handle. The longer that handle gets, the more bullish, the more energy is being stored for the next move. And it usually means a huge move, bigger than like an inverse head and shoulders pattern. And so this is gold. And then silver's pan and handle has this thing called a bull flag as the handle. And that is also an extremely bullish sign. If you read my book, you're going to discover that today the buyers of in the 1980s, let me see what we'll get to that in a minute. In the 1980s, the people that, no, I'm sorry, the bull market of the 70s ending in January of 1980, the people that pushed gold and gold up 25 times its original price and silver 41 times was 5% of the world's population from when Nixon took us off of gold in 71 to the last day of 1974. Gold rose from $35 an ounce up to whisker away from $200 an ounce. And then it pulled back to 103 over the next 20 months, I believe. And that's the mid-cycle correction that we've been in. Gold hit its high. Let's go back to the gold chart for a second. Gold hit a high here. This correction is basically the same mid-cycle correction that we had from the end of 74 into 76. And then it bottomed in 76 and started going up again. And it was a jagged thing going back up. But then when it broke its previous high and really took off and went from that $200 to $873, I believe, was the intraday high on one of the exchanges for spot gold. I saw a chart, I've got it in my files somewhere, of one of the futures contracts at $900 an ounce. And so all of these prices, there are so many different prices for gold, it gets really confusing. But I'm always talking about spot gold. We've got these, it was only the people that drove the price up. The price is set on the futures exchange, the commodities exchange. The big one then was the London Bullion Exchange, because in the US, it was illegal until the end of 74 to own gold. So there wasn't gold on the commodities exchange until 75. In Australia, it was illegal until 76. The result is that only 5% of the world's population participated in the first half of that bull market. And then from 75 to 1980, it was about 10% of the world's population. Today, there are 18 times more people that can participate. And instead of gold being illegal to own in all of the socialist countries, the USSR, Mao's China, half the world's population, it was illegal. And and out of the other half, about 30-40% of that, they were so poor that they couldn't afford, and there were no exchanges in Africa or South America or Southeast Asia, or all over the world. No exchange in India to be able to buy this on. So there were impediments. This time, it's 18 times more people. We've got 50, they all have 55 times more currency. The number of millionaires, there's 56 times more millionaires. There are 200 times more billionaires. The stock market capitalization globally is 49 times higher. And so there's a blizzard of paper assets and currency out there. The pile of metal for it to land on is only about twice as big. And so I calculate that roughly it's almost impossible to calculate this number. So I'm swagging it. Swag stands for scientific wild ass guess. So this is based on a whole bunch of data. And then a lot of that data, the billionaires also own the stocks that are up 49 times, in the global market cap. There's times where things are being double counted. So I tried to eliminate all of that. And I just come out with, there's probably around 25 times more currency available for this gold rush than there was, 25 times more dollars, euros, pounds, yen, yuan that are going to try and land on twice as many ounces of gold. Well, actually, I've already calculated the twice as many. It's 25 times per ounce. And so this is huge. This is the biggest gold rush in history. And it's going to be, I outlined in my first book and in this book, if in the Weimar hyperinflation or any other place that hyperinflation has taken place, there was an alternative currency that you could hold. If you were in Germany during the Weimar hyperinflation, you could hold French francs, British pounds, US dollars, or gold, or alternative assets. Well, I believe that we're headed toward a unraveling where fiat currencies become suspect. You just saw that the Swiss, the short-term bonds are they're not being as trusted. Everybody is buying credit default swaps to hedge interest rates. This whole system of basing everything on IOUs for IOUs for IOUs, because that is what the world monetary system is. I really encourage everybody to dig deep and try and figure this out. It starts, if you buy this, it starts with downloading the free chapter on GGSR 21. That covers how it's IOUs for IOUs for IOUs. So you've just got one chapter. I think it's about 50 pages long, so it's almost a book in itself, split into 7 parts. Please digest each part thoroughly before moving on, because you got to be able to hold all these things in your head at once when you get to the end, and you'll understand what's happening. So moving on, we've got that silver sign. Oh, by the way, silver hit $48 here. Name something else in the world that is selling at a discount to its 1980 price other than computer chips. There are a few people that will say that think they're real smart. Computer chips, that was a brand new technology, and now it's fully developed. But other than computer chips, is there anything you can think of that sells at a discount to its 1980 price? So, I show in the book also that I measure what silver was in January 1980 times the amount that all of these other monetary aggregates and asset classes have grown since then. And it is mind-boggling. Some of them have grown to where silver would have to be, so if it was at the same ratio, the same balance as it was in 1980 against this aggregate of the currency supply, or against real estate or the stock market or this or that, it ranges from the CPI. Silver has to be $200 an ounce if you just inflation adjust the 1980 high. If you use the money supply, currency supply, Dan can honk me there. Or any of these other assets, you come out with ranges up to like $2,300 an ounce, or 20, which it's not going to go to. I mean, I don't think that would be the dollar becoming absolutely worthless, but which is possible. But the thing is, with an average,
can you just let me know in the comments if we are still live? It looks to me as though we've lost both of us for a bit, but I'm back.
Oh,
and I wouldn't want you to be stuck with me. So let's see what happens here. Mike's probably still talking.
Okay. Can everybody see me and hear me?
I don't see any comment.
Wow. What could have happened? Huh. The counter is still there. If anybody can see or hear me, type a comment. Huh. Should I just continue on, just in case the problem is on our end, but we're actually live still? Does this get recorded, Dan? I can't hear you now.
Okay, I'm back. Whoa, this looks like a Grateful Dead concert now.
Yes.
Okay, so I lost you, but I think we've still got people online. We're still live. So if you wanted to keep going.
We're still live. Okay.
This looks awesome. Look at
that. Hopefully this is getting recorded. And
someone put something in a drink.
But my point was with silver is that, when you take all of these different aggregates and different assets and you look at the percentage gains that they have had and you apply that to silver's peak of 52.50, you come out with this average price range that is in the $900 an ounce area. That's probably not going to happen, but triple digit silver is baked in the cake. I do absolutely expect silver to break $100 an ounce. And I think that we're in the trigger point now. You may see one last dip here as margin liquidation happens in the stock market, and the big banks want to get liquid for some reason, and they dump some of their gold. But moving on we've got this is the tip of the iceberg, and I wrote about the tip of the iceberg, and this really is SVB. This is just the tip of the iceberg. There is a lot more coming. What the hell? The iceberg crashed into us. Us. Isn't it funny? Us is spelled US. And when you remember, you own gold and silver. I want to thank everybody for watching. Sorry for the technical problems, and I'll take a look at your questions and try and answer some of them later. Thanks. We'll see you next time.
Thanks, everyone.
At GoldSilver.com, we have a price match guarantee, free shipping, global storage options, and phenomenal customer service. Thanks for making GoldSilver.com your bullion dealer.